Today's presentation is about the circular flow of real economic activity. This is the basis for understanding some very basic relationships in economics, relating the role of the individual in the form of the household and their relationship to business, government, and the world. The two basic entities of an economic system are the household and the firms. The firms are where production occurs. Production is the transformation process in which productive resources are converted into goods and services. Note that the firm buys resources from the households and in turn sells goods and services back to the households. It operates as a seller in the product markets and a buyer in the productive resource markets. The households perform two basic roles. They sell their resources in the resource markets and use the proceeds, called income, to buy goods and services in the product markets. Typically, we view this activity taking place between the household sector and the firm through the lens of a capitalistic free market system or competitive free market capitalistic system. But it can also represent a command economy, such as it's found in the communist and socialist countries, as well as mixed economies, which fall in the range of between capitalistic and socialistic. We will touch upon the differences a bit later, but suffice to say it has much to do with the decision making at the firm as to one, what goods and services are to be produced, and how the household is compensated for its productive resources, which include labor, physical capital, entrepreneurship, and land, and two, how the household is compensated for the use of those productive resources. When we refer to the various components of the economy, we typically call them sectors. Specifically, we have the household sector, firms or business sector, government sector, and the foreign sector. Again, other forces such as government and world markets, imports and exports, are also part of the circular flow. We will look at them in a moment. Households sell their productive resources to the firm. Those productive resources, or the firm's input mix, are labor, capital, entrepreneurship, and land. Labor is self-explanatory, but it is important to note that it increasingly embodies human capital, which would include education, training, work experience, etc. Entrepreneurship is critical to the firm because it involves a decision-making component. Entrepreneurs are the high-level managers, CEOs, COOs, small business owners, etc., who determine what productive resources, the extent of those resources, and how they will be transformed at the firm into goods and services, and finally sold back to the households. It's important to note that in a free market system, the entrepreneur function is controlled, for the most part, by the market itself. That is to say, if an entrepreneur is not successful, they are typically fired or at the very least have to change their way of doing business. Capital refers to physical capital employed at the firm. That would take the form of machinery and equipment. Underlying that physical capital would be financial capital derived from the household in their role as owner, which could take the form of equity owner as a stockholder or debt owner as a bondholder. Lastly is land, which also includes mineral resources such as oil, gold, etc. In exchange for the use or sale of its productive resources, the household sector receives compensation, which is called the income distribution. This payment takes the form of wages or salaries for labor. Payment for labor, by the way, accounts for around 2/3 of the income distribution in the U.S. Entrepreneurs are often paid a salary for their role as labor and also receive profit sharing in the form of stock options and the like in their role as manager/decision maker. Capital is compensated in the form of dividends or interest, and land is paid in the form of rent or per unit purchased in the case of mineral resources. It's important to note that in a market-based economy, decisions are mostly made by individuals in terms of being the ultimate deciders in the product markets for goods and services. The entrepreneur guesses at what the consumers desire, and the compensation paid to the household for their productive resources are dependent upon how useful they are to the firm in making those goods and services. Meanwhile, in a command economy such as communism, the decision-making at the state-owned firm for the goods and services to be provided for the household are determined by government panels and alike. In addition, income distribution is also determined by the government. Members of households need the means to purchase the goods and services that provide food, shelter, entertainment, and so on. They acquire the means by offering their labor, land, and physical capital to the highest bidder in the input market. For example, when you go to work, you are selling your labor in the input market, and as a result, money flows into your household. The derived demand for productive resources at the firm points to its need to buy those necessities for the transformation process from the household. The term derived demand comes from firms' need to purchase productive resources from the household in response to the demand emanating from the goods and services markets for its products. The return flow of income, or the income distribution, is provided to the households for the use or purchase of its productive resources. Again, in a competitive free market economy, the firms pay only the opportunity cost level of compensation for the use of those productive resources from the household. In a less than competitive environment, the owners of those productive resources can receive more than their opportunity cost levels of compensation, in violation of equity. Keep in mind that the productive resources are labor, entrepreneurship, capital, and land. Firms sell goods and services in the product market. In their role as decision maker, the entrepreneur decides what goods will be produced and sold and for what price. Depending upon demand for the products offered, the firm receives compensation for the goods and services from the household in their role as consumer. In this complete representation of the circular flow of real economic activity, we can see the household in its role as a supplier of productive resources and in its role as a demander of goods and services. When we consider the two sides of the household coin, we look at it in terms of the income approach, in terms of income distribution on one side, and in terms of the expenditure approach, the goods and services purchased from the firms, on the other side. In this final slide, we have incorporated government and foreign sector into the circular flow altogether, adding to the previously presented household and business sector scenario. There are several points to consider. One, taxes, whether they fall on the firm or the household, are ultimately borne by the household sector. Bear in mind that the firm is only the place where productive resources are transformed into goods and services. Any taxes levied on the business sector are either passed forward to the household in the form of higher prices or backward to the household in the form of reduced income. A case in point is the corporate tax. While the firm pays the tax, the burden of that tax either falls on the consumer in the form of higher prices or to the reduced income to the household in terms of income paid for its productive resources. 2. When we consider government's role in the economy, it should be noted that the household, from an expenditure approach, consumes around 70% of goods and services from the business sector. The balance of that spending is termed non-consumption spending. Included in non-consumption spending is private investment, gross private domestic investment, government spending, government consumption expenditures and gross investment, and exports. In summary, non-consumption spending has the effect of expanding the economy. They are referred to as injections. 3. On the other side of the equation are the withdrawals, since they have a tendency to slow down or depress the economy. Included in the mix for the withdrawals are taxes, imports, and saving. Bear in mind that taxes, in and of themselves, certainly do depress or slow down the economy. In addition, imports have the same effect because payment for and resulting income derived from those goods and services flows out of the country. Lastly, since saving is not consumption, it has a depressing effect on its face. In summary, to the extent that the households pay taxes, save, or buy import foreign goods and services, not all the income is consumed on the goods and services they produce. These non-consumption expenditures are called withdrawals. Also, the firms do not sell all the goods they produce to the household. The other sources of demand for the firm's products are called non-consumption spending or injections.